Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. I need to adjust my microphone here. Before we dive in and take a look at Bitcoin's daily analysis, remember this is for edutainment only and not to be considered as financial advice. Also, at any time during the video, feel free to smash the like, ring my bell, hit subscribe, and leave comments in the comment section to not only help promote the videos and sharing of it with YouTube's algorithm, but also to get it in front of more people who are trying to learn about crypto and investing. So I would appreciate it. Let's take a look at the news first, and then we'll dive into the analysis and the charts. Get the mouse highlighter on. Here we go. So this article from Forbes here talks about the massive 2022 all-time high. They're predicting that Bitcoin is gonna hit what is it called? Let me find my place here. Yeah, they're predicting that the Bitcoin price will peak around 82,000 and then drop back to around 65,000 in 2022. Additionally, and this is a panel of experts, and so take that for what you will. I don't think Bitcoin is gonna anything's possible, but for Bitcoin to go to 82,000 in 2022 with the macro environments that we're in, I think it's gonna be very challenging. It's possible, but it's gonna be very, very challenging. They also warned that more advanced blockchains such as Ethereum, BNB, XRP, Solana, Cardano, Luna, and Avalanche could eventually eclipse Bitcoin. I don't think that group, it's anything's possible, but some of the coins in that group, some of the coins are iffy in there. Luna, yeah, totally. Ethereum, strong possibility, but some of the other ones, I'm not so sure about. Cardano has some hope with their development, and especially with Hydra and all the scaling that's coming in. Solana, strong possibility, really good backing, but I'm not so sure about that. I think eventually, yes. I know the Bitcoin maxis will totally disagree, but it is what it is. According to Cointelegraph, GBTC premiums near 2022 high as SEC faces call to approve Bitcoin ETF. What this is about is Grayscale, one of the biggest. They have futures Bitcoin ETF, and their price was previously trading at a low compared to Bitcoin's price. So in other words, because they hold Bitcoin and some other crypto, but their stock price was lower. So what does this mean? But now they bounce back. So it meant that people who invested in Grayscale could have just, bought Bitcoin and they would have been better off. But now that their price is going back up, so that's good. Good for them. And they've been wanting a Bitcoin ETF, not a futures ETF, a just regular ETF for the longest time. And they're saying that it's a matter of if, not a matter of when, Bitcoin spot ETF will be available. And I agree with them. I think some people think it's mid 2022. Some people think 2023. I think within that range probably is doable. And why is spot Bitcoin ETF important? Because it opens up Bitcoin to traditional investors where they don't want to hold Bitcoin themselves. They just want to hold pieces of it through an ETF. In other words, it expands Bitcoin exposure for more investors, potentially driving the price up. This article is quite interesting. According to Cointelegraph, and I actually read the study itself because I was curious. And it's the title of this article is "Meaningless and Weak: Debunking the Bitcoiners Are Psychopaths" study. This study, basically, I'll just summarize the study for you. A bunch of researchers from the Queensland University of Technology surveyed 566 people on their attitude towards crypto, and they found out that most people who are interested in crypto are psychopaths. The interesting thing about this is the people who are in charge of the study, this research, are mostly, they specialize in marketing. So I'm just let that sink in for a second. So so they did a great job marketing their research, but several people have since debunked it and basically said that these researchers don't know what they're talking about. This article from the Bitcoinist talked about how Bitcoin mining profitability could point to a capitulation still ahead. Capitulation means a quick drawdown, a quick crash. That's what capitulation means. And basically, they're just citing like these more older Antminer S9 and S19 Bitcoin mining machines are not turning a profit because the cost of them mining Bitcoin is higher than the new ones. Like the Antminer S9 costs $26,000 to mine one Bitcoin, with the Bitcoin price being like right today, let's say right 39,600. Well, doesn't leave a lot for them to pay for additional expenses and things like that. The S19 miner costs $31K to mine a Bitcoin. So that's just electricity alone. And so what could potentially happen is if Bitcoin's price continues to dive or hold where it is at, they might need to sell some of their holdings in Bitcoin to pay for expenses, and that could drive the price down. And that's why they're thinking the capitulation. And that's it for the news. Let's take a look at the heat map here for crypto. Looking a little bit better than this morning. It was blood red this morning, except for a few stable coins. But yeah, looking better. Bitcoin 39.6 here, down 1.5. Dominance 40.78. Ethereum still hanging around 3K. Dominance 19.27. Among the coins that are turning green, we got Luna, BNB, Bitcoin Cash, ADA, Link, Algo, ETC, Doge, Shiba, and Uni, etc. So it's looking a little bit better, but we'll see what happens. Let's dive into more charts and see. Actually, hang on. The crypto market right now is still down 1.73% at 1.85, and that's pretty low for this week. $1.85 trillion. And here's Bitcoin right here. You can see that its market cap down 2.91, down 7 on the 7-day, down on the 30-day, but still up in the 60 and the 90. So and here we are at the TradingView chart. Let me maximize this. So Bitcoin, yesterday I mentioned in my analysis that Bitcoin will likely chop between the ascending triangle support and the 41K resistance here. It did do that. It chopped there, but it broke through the ascending triangle support, which is a very strong support line going back to months. So broke through that with a full body. So that's very bearish. So that's the third bearish daily candle in a row and descending. And it wicked all the way down past this 39.6K support also. So broke down through two major support here. and then it pulled back. It pulled back just above the 39.6K support. So that's good. But that's a very bearish move. And it's mainly because of the, if you watch my video earlier about the market analysis, it's mainly due to the Fed announcing more aggressive, or their tone is more aggressive, saying 50 basis point is to be expected, and some are saying, 75 basis point in the months coming. Even the most dovish Fed chairperson, one of those people, she, I think her name's Mary. She mentioned that she's going to revisit with her peers and take a look at, what their thoughts are. She typically is very, very soft. So that just caused the market to tank. Stock market tanked hard, pulling the crypto market with it. So total de-risk a day today. Let's see where else here. So Bitcoin is right now is in between, currently 39.7 K here, just between the Bollinger basis, blue line here, and that is at 41.9 K, the basis, and the bottom of the bottom Bollinger Band is at 37.6 K. So it's right in between, and it's just resting above this 39.6 support level here. Next resistance will be the ascending triangle support, and if it passed that, that's good. But if it doesn't, if it passed that, the next resistance will be around 41K, and we'll see what happens. Just I think staying underneath this ascending triangle support is very bearish. The let's see what else. Previously, I've mentioned this. I leave this in so you can keep track. But basically, Bitcoin, when it's below the Bollinger basis line, in the past, it's been below for 17 days to 38 days. And we're on the 17th day right now. So Bollinger basis, blue line here, drops below. We're on the 17th day. So 12 to 38. So we're somewhat kind of in the middle there, that range. As far as volume for the traded volume for different price level, it's about average right here. The highest traded volume level is down here at around 38.6K. And we're currently right here, which is somewhat, right here is not so average, but right in this zone is average. But right where it's at, it's kind of lower. So let's go down and take a look at the daily volume. Daily volume is above the moving average for the third day in a row. Unfortunately, all 3 days are red. So high volume, but bearish high volume. For the KDJ, the white J line of the KDJ dropped to 43, almost touching the blue line, the blue K line at 42, and the red D line at 41. I think ever since I did this chart, it probably dropped further. But I gave that a bear. And where's that? It's in the middle. All three are intersecting in the middle of the range. So 80 is the high, 20 is the start of the low. 80 is the start of the high range. As far as the MACD, the white MACD line, it was curving up heading toward the descending reddish signal line, but then it curved back down away from it, putting in a darker red histogram bar that's slightly larger than the previous one, printing at negative 785 when I did this chart. So it's the 19th consecutive bearish histogram bar. And it was getting thinner. It looked like it was going to pop. The white line was going to pop above the red line and print more bullish histogram bars, but it didn't do that. So the pattern remains bearish, and until it curves, these histogram bars get thinner. I won't say that it's bullish trending yet because it's trending the opposite direction. Down below, we have the red RSI line, the blue CVD, and the white momentum indicator all dropping down together. The red RSI line was at 40, gave that a bear. 40 is just below the middle mark for RSI, so it has a lot of room to move up and down, but it's currently trending down. The blue cumulative volume delta or CVD line is at 1.810 million, and that's bearish. And that's right in the middle range of it's high here and it's low here. So it's right in the middle, but trending down. So it got a bear. The white momentum indicator is at negative 465 when I did this. I gave that a bear, and that's right here. And that's somewhat, it's slightly on the upper half, just above the middle area of its range. Bottom is here, top here, and here. So if you combine all these indicators together, it's extremely bearish. I forgot to change give me a second here while I update this chart. It's going to be choppy, very choppy, but it's bearish. So make sure I get this right. Here we go. So yeah, it's bearish. As far as oh, I forgot to update this too. As far as the entry levels, here we have, let me move this out of the way. So I have FOMO here, and this is no longer FOMO. It's right where the price line is, so it's no longer FOMO. I would put FOMO down at 39K here and make that 10% for entry. There you go. So entry price would be 10%. And again, this is not financial advice. This is edutainment only. Entry price 39K at 10%, 37.5, 10%, and down here 35K, 20%, 32K, 30%, and 30K, 25%, and 10% at 25K. Feel free to like layer in different, you can layer in differently. Those are just buy levels that are cross-referenced with heat map, and also the previous Fibonacci levels. So yeah, two crabs and a bear. It's gonna be choppy, bearish choppy. So keep an eye on that. Let's take a look at some additional charts here for MaxPay options. MaxPay. It hasn't been very accurate because the macro environments is just dominating the price movement. But traditionally, in normal conditions, MaxPay price tends to move towards MaxPay, and for the next for these periods here, on the 24th, 40K, 23rd, 41K, for 29th, 42K, and for May the 6th, 40K. So roughly running between 40K and 41K in the for the next week or so, next 1 or 2 weeks. And for the volume, options volume by expiration date, volume are contracts that have already been filled. Open interest are contracts that are still pending. The day that we want to focus on as far as MaxPay is concerned is the 29th. We see high volume here, and open interest, open contracts still high here. The other days, the MaxPay is not going to be much of a factor, but the 29th potentially. So here's the current heat map sell walls on the bottom, buy walls on the sell walls on the top, buy walls on the bottom. If you don't know what these what a heat map is or what sell walls or buy walls are, feel free to check out the links in the description. We got the 50K sell walls still there, and down below we got buy walls at 35, 30, 30, 25, 20. And notice that the 33 is coming in low, more yellowish, and 32 here is coming in brighter. People are, so those walls are getting larger. People are expecting, preparing for a potential drop down. And as far as cumulative volume delta, this describes aggressive buys and sells that are market buys and sells. They're not limit buys and sells where you set the price and you wait. Well, they're paying or buying, they're selling or buying at market price. You can see here very aggressive buys here, aggressive sells here, and then back to aggressive buys here for the most part, going back to the 21st yesterday. So it gives you an idea. And this meter here gives us, it's just slightly, it shows more aggressive buys than there are than aggressive sells, but it's towards average aggressive buys. Down here would be a very, very aggressive buys. Here's the liquidation levels as price dropped. A bunch of longs got liquidated. You can see that here. It dropped. This is yesterday. Liquidated these long, high leverage long positions, and then went sideways. Dropped some more. Liquidated these high long leverage positions. And then now you've got an overage of shorts. So this 772 million is the money that's in the short levels right here. The open interest short, the open high leverage 25 to 100x high leverage short levels. The money in here minus the money in the long positions will give you this. And at this amount, it's not going to matter much as far as an impact to price. Right now the macro environment and the correlation with stocks is going to dictate the price for now. But in normal situations, when you have excess high shorts or excess high longs, someone could take a counter position, the opposite position, influence the spot price, and win on their perpetual futures high leverage positions, but not at this level, and not with the current macro environment. And we're back to the chart. So what's going to happen? It's going to chop right around this area here. If it remains below the ascending support here, or now resistance, it's going to be very bearish. If it chops below the 39.6 support again, that's even more bearish. But more likely it'll chop between the green line here and the red line here. So right in between there. I appreciate your time. And this is my second video for the day. And I have one more left, and that's Phantom Friday. And I'll do that probably later on after I get some exercise and play some volleyball. All right. Please help promote my videos, especially for newer investors and crypto enthusiasts. Feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section. Appreciate it. Thank you so much. See you later.